What's up, everybody? It's Johnny, and I am back today to talk about taxes. Let's just say there are a lot of tax changes coming in the year 2023. The sooner you plan and prepare, the better. The goal each year should be to make as much money as possible and to pay as little taxes as possible. In today's video, I will be talking about two of the biggest changes coming to 2023 personal income tax returns. If you have not already done so, please click that subscribe button so you do not miss out on any important tax or money-related videos coming in the future. Alright, here we go. Let's dive into this. I will start first with tax brackets. Everyone wants to know about tax brackets and how they're changing. As we all know, inflation is a big issue in today's economy. Adjusting tax brackets is not uncommon and is done annually to avoid something called bracket creep, where inflation can push taxpayers into a higher tax bracket. Income thresholds for federal tax brackets will increase by approximately 7% in 2023 to try to combat the inflation issue. I would not call this a gift from the IRS. Don't expect to get rich off of tax savings, however, it may help. So what I'm going to do at this part in the video is I'm actually going to show you the 2023 tax brackets for single filers and for those who file married filing jointly. You will see the increases in the income thresholds and exactly what I'm talking about compared to 2022. Alright, let's talk about this. Let's start with the single brackets. As you can see in the column to the left, the marginal rates stay the same. Marginal tax rates are the highest rate your money is taxed. Effective tax rates are different than marginal tax rates. The effective tax rate is the actual tax rate, and to me, the most important rate. The reason for this difference is because our tax system is what is called a graduated tax bracket system, which means the more money you make, the more you pay in taxes. Tax rates only apply to income within the bracket. Think of it like filling buckets. First bucket is taxed at one rate, then the next bucket is taxed at another rate, then the next bucket is taxed at another rate. If the income thresholds increase, more income is taxed at lower rates, hence tax savings. Let's use a specific example. I'm a single taxpayer and I make $100,000 in both 2022 and 2023. In both years, my marginal tax rate is 24%. However, 2023 has a lower effective tax rate, and here's why. In 2023, 0 to $11,000 would be taxed at 10%, whereas in 2022, it's 0 to $10,275. As you move up, you will see that more income is taxed at lower rates, all the way up into the 24th bracket. So as you can see there, in 2023, $95,376 up to $100,000 will be taxed at 24%. Whereas in 2022, $89,076 all the way up to $100,000 will be taxed at 24%. So what you can see is when you compare 2023 to 2022, especially in the highest bracket, your effective tax rate will be less in 2023 than your effective tax rate in 2022 because more money is taxed at lower rates. Here's the married filing jointly table. You can apply the exact same example to this table and you will see that although the marginal tax rates may be the same in 2022 and 2023, the effective tax rates will be less because more income is taxed at lower rates. Alright, so that covers part one of the video. We went over tax brackets and you can clearly see that although in a lot of cases the marginal tax rate may be the same, the effective tax rate will be lower, which could be material for some people. Okay? So let's move on to the second part of this video. Another big change coming in 2023 taxes to combat inflation is the change to the standard deduction. Check this out. As you can see, here's the table showing the differences for each filing status in standard deduction from 2022 to 2023. Please note, for taxpayers 65 or older, you can add $1,500 to your standard deduction for 2023 if you are married. This increases to $1,850 if you are unmarried or a surviving spouse. Okay, so now you've seen the visual changes to the standard deduction, but at this point in the video you may be saying, what exactly is the standard deduction? The standard deduction can be simply defined as the number of tax deductions you can subtract from your income before you begin to owe taxes. Now, when it comes to your personal taxes, you may deduct the standard deduction or the sum of all your itemized deductions, whichever is greater. Itemized deductions are things like real estate taxes, mortgage interest, charitable contributions, and out-of-pocket medical expenses. I will be doing a video on itemized tax deductions soon, so stay tuned. Alright everyone, so in conclusion, we went over tax bracket changes for 2023 and the standard deduction change for 2023, all in an effort to combat the inflation which we are currently experiencing in our economy. I hope this video was helpful, and remember, it's never too early to plan for taxes. Thank you very much for watching.